Zomato slips another 10% in today's trading session after cautious management commentary on the quick commerce business. Jefferies cuts its target price from 275 to 255, while CLSA cuts its FY 25-26 earnings estimates by 25 to 34%.
Dixon Technologies hits 10% lower circuit post its Q3 earnings. Goldman Sachs believes that the earnings upgrade cycle for the company must have halted for the time being. The management tells CNBC-TV18 that the demand in the mobile segment remains steady, but not very healthy.
MCX slips in trade following its third quarter earnings. The company's growth rate slowed down on a sequential basis while it missed its profit estimates that the street was working with as well.
Oberoi Realty slips close to 6% in early trade on the back of its Q3 earnings. The company's collections have risen on a year-on-year basis, however remained lower versus the street estimates.
Street gives a thumbs up to Sunteck Realty third quarter earnings as the stock rallies over 7%. The company posted a net profit against the loss last year, and its pre-sales too surged by 40% year-on-year. Well, it's another day. You're watching us here on Chartbusters. I'm Mangla Malu. With me, Nigel D'Souza. Typically, we see some green on the screen, but today there has been a very deep shade of red. Not too different from the shirt that you're wearing, Nigel. 200 points down on the Nifty. And from the highs itself, it's a lot more than that. We're, holding around the 23,150 mark. The Nifty bank is down by almost 500 points. And where the mid-cap index, the portfolios are feeling a lot worse today. Nearly 1,800 stocks which are declining for 650 stocks which are advancing today.
Well, that's right, Manglam. Let's go straight to our first management on the show. We have the Karur Vysya Bank. The bank reported a solid third quarter result marked by strong rise in net profit and improvement in some asset quality as well. We're joined by Mr. B. Ramesh Babu, the MD and CEO of Karur Vysya Bank. Hi, Mr. Babu. Good morning, and always good to see you in. Well, your gross NPAs is, the ratio is the lowest in the banking sector itself. Give us some clarity. Did you sell any NPA to an ARC? And will we continue to see asset quality improvement from here on as well?
Yeah. Good morning to both of you. Now, first of all, thank you very much for the opportunity. Regarding the gross NPA, I can just clarify saying that for the last 4 years, we didn't sell any of our asset to any ARC. So everything has been done internally. What we did is we formed a collection team internally in the bank, and we understood these are the issues which can come up and all. So there we started focusing on our SMA 1 and 2 starting, and later we moved to SMA 0. So that way, if you can find, our SMA 30 plus for the whole portfolio is 0.38%. So that is the reason we ensured saying that the slippages have to come down. Secondly, we started working very seriously on the recovery front also. We formed the legal team, we have strengthened it, and disposal teams also we have formed. With all these things, the recovery started. You can find that write-off recovery also, it has come out so well. All these have supported us in bringing down the gross NPA to 0.83.
That's incredible. Mr. Babu, you had earlier said that gross NPAs won't cross that 1% mark. Not only they have not crossed that 1% mark, they're stabilizing around that 8.3% mark, 0.83% mark as well. So what we're trying to understand from you is what is the kind of further improvement that we can see from here on? Is there room for that, or do you think it's around stable levels right now? That's as far as the asset quality is concerned. And on the loan growth as well, you had guided for over 15%. Do you maintain that, and what's your prognosis for the next year?
Absolutely. Now, asset quality is concerned, more or less we can maintain at these levels, if at all, because our efforts will continue to further actually accelerate the process, and in the process we will be able to do something more better. But otherwise we can treat in the new normal. This is the way normal we can think of. Coming to the credit growth also, if you can look at divide the entire issue into two parts. Our focus for the last 1.5 years, we have shifted on the RAM vertical, because there its majority is collateralized and the yields are also pretty good for us. That is the reason, if you can see our presentation, it has grown by 20%. And whereas the corporate, consciously we have brought it down because the yields are low there. When the liability side, we have some sort of a stress, particularly on the CASA, the cost of deposits have gone up. We need to make it up overall on the profitability front. That is the reason we focused on RAM. So I'm not saying that 20% growth will come up here and there and all, but maybe I can think 16 to 17% we can think of under the RAM segment. Overall, we can think around 14% for the assets growth. That's what we can think even after the shortfall in the corporate.
All right. So RAM you're saying will grow 16 to 17% and overall will be growing at 14%. Corporate, which at one point was over 40% of your book, you've brought it down to sub 20% as well. That's your target.
16,
So
16 now, 16%.
16%. So from here on, what is your prognosis on the corporate front as well? I mean, at some point you will have to, start giving loans there as well. It will bottom out, right? So what will the product mix and then steady state loan growth look like?
Mangalam, the logic is very simple. When the money is there, just like a businessman, if we think, so where we can get the maximum yield and the risk-wise lower, naturally we will try to put the money there. Currently, there are other opportunities available on the RAM sector. As and when we find some sort of a freedom as far as the liabilities are concerned, and the CASA also position improves. So we will go back to corporate. It will be around 20-25%. That way we can take it forward. But it's a tactical decision taken for the time being to continue with the RAM.
Right, Mr. Babu, what about NIMs? I remember you had told us that worst case scenario, it will go down to around 3.8% or thereabouts. Do you think the risk is on the downside or do you think it will hold at current 4% odd?
No, I'll tell you, because it's a one-way traffic now. Yields cannot go up from here because above all, RBI may cut the rates also. So that way that is blunted. And second side, deposits cost is there. Every time it has been going up because the repricing is happening when the renewals are there. Automatically it will go up. So that way, if there is a rate cut, we can think of around 3.85 to 3.9, we can think of the NIM. Suppose if the rate cut is not there, it can be around 3.95, that's what we can think of.
All right, so 3.8 to 3.9 if there is a cut.
3.85.
3.8 to 3.85, very specific there.
If the rate cut is there,
If the rate cut is there. And final question then, when it comes to deposits and fundraising, what's your strategy on increasing your deposits from here on? And do you have any fundraising plans in the near future?
Fundraising as it is, we don't require because we have sufficiently capitalized. So that way the earnings, what all we have, if we plow it back, that will be quite sufficient to take care of our growth, because you would have seen our risk-weighted assets is also around 56%. Even if it goes to 60, 65 also, so we will be well within this CRAR, and that's why there is no need. Now coming to the deposits is concerned, we have taken many measures within the bank. We have formed the sales vertical. So under the different types of sub-verticals we have started there and all, focusing on the institutions, NRI and corporate salary. That way we have started working. Around 1,200 people we have taken from the market to take care of this for the acquisition. And likewise for the deepening also, we have taken the resources within the branches, around another 1,500 people we have taken. These people, they will be engaging with the customers for the retention, because both acquisition as well as retention, both are important to fill the hole. So that is the reason we are actively working on the deposits, because there's the resources which we need to deploy for the assets. So we are abreast of the situation.
All right, we take that point, Mr. Babu. Thank you so much for joining in. As always, it's a pleasure speaking with you. You've been candid with and forthcoming with your answers on loan growth, on asset quality, on credit costs, as well as increasing deposits as well. We wish you good luck, not just for the fourth quarter, but the remainder of the next financial year as well. A mild green tinge is what we're seeing in Karur Vysya Bank in an otherwise very red market. Let's talk about Growth Code now. It's an initiative with CNBC-TV18 and Grow. It offers valuable insight strategies that may help you make well-informed trading decisions. This week, pro trader Rajesh Baheti, who's the managing director, Cross Seas Capital Services, gave his insights on the new SEBI guidelines for algorithmic trading.
So currently, there is no real regulation as such that debars anybody from trading in algorithms or using algorithmic trading. What is happening is there are two kinds of algorithmic trading strategies that are being deployed today. On the professional or prop side, as what we do, all of our algorithms are approved by the exchange. The trades are entered as algorithmic trades. There's an identifier in the order sequence that identifies the trade as an algorithm. What is happening with the discount brokerages is that they are exposing their APIs, and anybody with access to that API can either write their own code, or there are some pre-authorized vendors who have already matched their trading strategies to these APIs, and they are farming it out to the retail public. And these trades typically don't get registered in terms of an order identified as an algo trade. but rather as a standard internet trade. And I think SEBI has a problem with that. They don't want the algo trades to be identified as standard internet-based trades. They want the algo trades to be identified as algo trades even for this retail segment who are currently coming in using the APIs exposed by the brokers. What SEBI wants to do is that if you want to run an algorithmic strategy and you want to write your own code, then you've got to get that thing certified with the exchange. The strategy has to be approved. And in case you are outsourcing it from certain vendors, those vendors will need to get registered as some kind of investment advisors.
Take a short break then. On the other side, we have the management of Indian Overseas Bank joining in to discuss their third quarter numbers and the outlook going ahead. Stay with us.
Welcome back. Well, the markets are under pressure. We've recovered a little bit from the lows, and one heavyweight that's trying to put its hand up and get counted is ITC. Remember, post that corporate action that took place, the stock actually has moved a little bit lower. It went down to around 430. But from there, as we speak, it's moved up a little bit. I think Nuvama had come up with a note overnight, and they believe that the risks are now on the upside because they are not expecting anything that will be so negative for them in the upcoming budget. So that's one view that came out. And for the time being, the stock has moved to the high point of the day. Yes, Mangla.
I was just wanting to point out Swiggy. If you look at Zomato is down about 11%. Swiggy, if you look at it, it's fallen as much. Swiggy is currently at the low point of trade. In fact, nearly 10.5%. So Zomato and Swiggy, both of them, if they come up for you on the screen, you realize that there's been a big cut because of Zomato's valuation weakness. Because when they went up, it was always, about narrowing the valuation gap. Now the valuation gap maintains, but at the same time, if Zomato has fallen 10%, then Swiggy falls as well. So we'll just keep an eye out on this trend as it moves.
Well, that's right. Well, let's focus on Indian Overseas Bank. The lender also reported a good set of numbers in the third quarter. That's backed by improvement in the cost to deposit ratio, driving margin expansion. We're now joined by Mr. Ajay Kumar Srivastava, the MD and CEO of the bank. Hi, Mr. Srivastava. Good morning. Thanks a lot for joining in. Well, I just wanted to focus on the deposit momentum. It appears a little bit softish on a quarter-to-quarter basis. That's clearly visible. There are indications that deposits, well, they're hard to come by. Your take on it, and what are you doing with regard to shoring up some deposits?
Yeah, exactly. For IOB, I can give you the details of deposit growth. See, the total deposit consists of three things. That is CASA plus retail term deposit plus bulk deposit. So if you look at the numbers, our CASA has improved by almost 9% year on year. Our retail term deposit has increased by 8%. The bulk deposit, which is hot money and which is for short term and the cost is high, that we have as a strategy, as part of a strategy, we have allowed it to go. On a number basis, I can tell you as of 30th September, we are having around 23,000 crores of bulk deposit. And almost 7,000 crores of that we shed in this quarter, Q3. And because of that setting of bulk deposit, which was part of the strategy, the deposit growth is visible as muted. But as a matter of fact, CASA, which is 43% of the total deposit, the retail, which is almost 51% of the total deposit, in those two sectors, we have grown.
All right, and that shows, on your NIMs as well. So let's talk about the NIMs itself. We saw them expand year on year as well as quarter on quarter. And with you focusing more on CASA, do you see more upside for NIMs from here on? Or do you think that maybe, they've topped out here?
There will be some challenge going forward because as per the expectation of the market, this repo rate is going to be reduced. So almost 55% of my credit portfolio is linked to EBLR. So yes, there will be hit on income going forward. And that is why the focus on CASA is there. And I would like to share a number with you that the last almost 21 months, 7 quarters, we have onboarded 5.2 million new CASA customers. And through that, we have faced almost 17,000 crores of fresh CASA business. So focus is, of course, on low-cost deposit, that is CASA. And whatever impact will be there by way of reduction in repo, we will be able to compensate that. So overall, NIM, we are looking at maintaining at the same level of around 3.3 to 3.4.
All right, 3.3 to 3.4 on the NIMs. And finally, before we let you go, just give us three numbers, sir. Your growth expectations on the loan front and your expectations on gross NPA and credit cost.
Yes, in the beginning of the financial year, we gave a guidance that deposit and credit both will be growing by around 13 to 14%. If you look at the numbers, we have grown in first 9 months of this financial year, we have grown by almost 9 to 10%. And Q4 being the busiest season, we are pretty sure that the guidance of 13% on both sides, deposit as well as credit, we are going to surpass. That is one point. Regarding NPA, you can see quarter on quarter, year on year, this is coming down. GNPA stands at 2.55, that is the lowest. And net NPA, we are standing at 0.42, that is also one of the lowest in the system. And in this Q4 also, we are looking forward to reduce it further to maybe by 5, 6, 7 pips more.
Okay, all right. Thanks a lot, sir, for joining in. A short but crisp chat. Wishing you all the best, and we look forward to touching base with you sometime during this quarter yet again. For the time being, we slip into a short break, come back, continue our focus on markets and stocks that are moving around.
Welcome back. You're watching us here on Chartbusters and CNBC-TV18. As you can see at the top of the screen, the Nifty is still down about 140 points, though Nigel and I, as always, take credit. We'll take credit for about 40 points of recovery from when we started the show. The Nifty was down almost 180 points, still down about 150 points. We have the mid-cap index, which is struggling. 1,800 stocks declining for about 700 stocks, which are in the green. So tough trade ahead for bulls. We'll take a short break, come back on the other side. Trading hour will take the market action forward.